Hello and welcome to today's live technical analysis session. As you can see, we are now opening our MT4 platform. So, as usual, we will be starting off with the euro against the US dollar. For the euro against the USD, we had placed our R1 and support levels. Yesterday, I did say that I was anticipating the pair to move in a downwards fashion. But now, as you can see, this daily candle has broken above our R1 resistance level at 1.1070. So it does appear that our hypothesis was wrong, and instead the pair has recouped. Now, I would attribute this movement to the release of the US JOLTS job openings figure, which was released during yesterday's American session. Essentially, the figure came in lower than expected, which tends to imply a loosening labor market. The issues with a loosening labor market is that the Goldilocks scenario for the US economy in terms of a soft landing appears to be slightly in doubt. Essentially, we're seeing more market participants anticipating a 50 basis point cut in the bank's next meeting. But we should state that Fed funds futures still implies that the majority do expect a 25 basis point cut by the Fed in their next monetary policy meeting. Now, with jolts coming in lower than expected yesterday, I would place an even greater emphasis on the release of the ADP NFP figure, which is set to release later on today. Moreover, we do have the ISM non manufacturing PMI figures, which are expected to come in slightly lower than last month's figure. Now, if they do come in as expected at 51.4 versus last month's 51.7, it is still in expansion territory. So, by remaining in expansion territory, it could mitigate the negative effects on the US dollar. But if it suddenly declines and enters contraction territory, that would be very worrying for the US economy. If that happens, I would not be surprised to see more and more market participants calling for a 50 basis point hike. The issue is, however, with cutting by 50 basis points, is that you could willingly undo the cumulative tightening period of the Fed. So if you cut by 50 and it's very fast, very quick, then we might see a bit of a resurgence in inflation. So, personally, I would be expecting the Fed to potentially cut by 25 basis points and in their accompanying statement to be dovish in nature, which could still weigh on the greenback, but perhaps as not as much. From a technical point of view, we are looking at the euro against the US dollar. Germany's factory orders rate came in higher than expected, which may have provided some support for the euro during today's trading session. If we drop down to the 4-hour time frame, that resistance level that we have placed together on the daily time frame is much clearer. Look at the 4-hour. So you had numerous candles. So take a look at, I'll use the crosshair here. Look at this candle here. So look at these, finding heavy resistance. Look at these two wicks and the third one here. It reached to this level and found significant selling pressure. But once it managed to break above, this is now resistance turned to support. So 1.1070 for us is our new support level at S1. Now, having broken above the resistance now turned to support level, with the RSI and the 4-hour being at 60 does imply a bullish market sentiment. So the next potential target for the bulls might be the 1.180 resistance line. And if you look at it from a daily chart, it does make a bit of sense. Still, one could also opt for a shorter and more intermediate resistance level at 1.11489. So if you round it up, that would be at 1150. So this could be an intermediate resistance level, and then an even greater resistance line could be at 1.1180. But because we are looking at this chart from the daily time frame, which is what we had placed our resistance and support levels yesterday, we are going to be ignoring that for today. Still could still be valid, but I do believe that the major resistance level is at our R2, which is now has turned to R1. So R1 is at 1.1180. Higher than that, we have R2 at 1.280 as well. I do need to adjust that line, as you can see here, which currently is at 1.12794, but we are simply rounding that up, so not that big of a deal. So 1.1280, that is our R2 resistance level. For support, this was resistance now turned to support, so 1.1070, that is our new S1, and which is why we're changing this text label from R1 to S1. And of course, oldest one becomes S2, oldest two becomes S3. We are going to be looking at the USD against the Canadian dollar, where the BOC did cut by 25 basis points, but the loonie gained against the US dollar. I will attribute that once again to the release of the US JOLTS job openings figure. But keeping on track, we are still on the euro. We can keep this as three line, the old one that we had, for future reference. So in theory, this could be S4. And we are going to be looking at for our R3 resistance line. So we've taken this high for R1, we've taken a prior high for R2, and we are going to be looking for R3. And then we went back, as you can see. So this is what we had determined as a resistance level for R2. We saw heavy buying pressure. Once broken, moved lower, came back up, acted as support, shown by this bearish candle, which wicked down. But once it broke below it again, it moved lower. So we do have this as our valid R2 resistance line. Looking for R3, however, we're looking once again at the price action. Note how it moved. We are seeing heavy selling pressure at this point, and we are going to be trying to keep the same distance between R1 and R2, between R2 and R3. So if we take our measuring tool, essentially Control F, you can measure the distance, approximately 104 pips between R1 and R2. And as such, if we reflect that higher, so roughly 104 pips as well, that is at 1.1387. So it's somewhere around here. So I'm looking where we have seen heavy selling pressure, and that is a trend line, not a line. There we go. So I'm looking for selling pressure. Voila. Now look at this wick from this bullish candle. Rested, found support, broke below, moved lower. Broke above, found support, broke below, moved lower. Validated by this wick of this bullish candle and this wick of this bearish candle, which seeked liquidity from sellers and then moved lower. So this for me would be my R3 resistance line, which is currently at 1.1395. So we are rounding that up, and that for us would be R3. Overall, for the euro, for a bullish outlook, we would require it to break above R1, as this could simply result in moving in a relatively sideways motion. Let's say, for example, the ADP comes in higher than expected, which then casts doubt on the release of the US JOLTS opening figures, which imply the loosening labor market. Then that wouldn't necessarily weigh on the greenback. Instead, it could provide some support. So for today, if it does move in an upwards fashion, it could be up until R1. And then the next big test would be the release of the US employment data, which, as we stated yesterday, the unemployment rate is expected to come in lower than last month's rate, which would tend to imply a resilient labor market and thus could provide some support for the US dollar. So my next potential target for the bulls could be at R1, as we said, at 1.1180. We will be looking at US equities as well. But finishing off with the euro against the US dollar, we have placed our R1, so our resistance and support levels. Next potential target for me would be 1.1180. If you would like something which is a bit more intermediate, I would be placing a potential resistance level at 1.115 overall, so rounding that up as well. But this is our technical analysis for Euro USD on the daily time frame. They are sized at 57, so the bulls do appear to be moving. Excuse me, the bulls do appear to be taking control over the pair's direction. This for me could also be a swing low, so higher low, higher high, 1, 2, 3, then a higher low, higher high, higher low. Does appear to be moving in a relatively upwards fashion after breaking above resistance turn support. Moving on to USD against the JPY, the support level that we had placed together yesterday, 143.45, appears to be still in play. Despite this being a bearish candle on the daily time frame, you can see that it is still above that S1 level. So if it does break below S1, so if the daily time frame, so the daily candle closes below S1, I would not be surprised to see a large movement in a downwards fashion, perhaps even to S2 at 140.15, because you are seeing heavy buying pressure. One could even say that this was a sideways moving channel. It rejected R1, it rejected S1, but if it does close below S1, could move significantly lower. We are still maintaining our sideways bias because it has not closed below S1, despite wicking below. we are still maintaining that sideways bias and it is above S1. If it closes below S1, bearish outlook for S2. If it does not, sideways bias between S1 and R1. In the eventuality that it does break above R1, so that possibility, we could maintain a bullish outlook as long as it clears R2 as well. And then we could see a movement towards R3 at 151.95. For the British pound, once again, the same scenario. We're thinking that it could be moving in a downwards fashion, but the R1 that we had placed together yesterday, 1.13140, has been broken above. Same case, daily chart broken above, rested and found support. And if we drop down to the 4 hour, same thing with the euro against the US dollar. It is finding support. So this is a valid resistance turn to support level. And as such, we would now opt for a bullish outlook as well for the British pound against the US dollar. So back to that daily time frame. We have R1 now at 1.3290, R2 at 1.3450. But I would be readjusting that R1 level, taking this high. So let's just go through it quickly. S1 becomes S2, old S2 becomes S3. I think today we might actually look at Microsoft, so we'll finish the technical analysis from yesterday. We'll once again have a look at Volkswagen since it is currently still in play. And a very interesting story. We had mentioned that yesterday in terms of a political level. We will be looking at oil. There are reports that OPEC may be delaying the increase in production, which does make sense. Oil prices are moving lower and OPEC wants them to be higher. So if you're increasing supply, that could weigh on oil's price. So it's moving lower. I would not be surprised to see them withholding from increasing supply into the market. I would not expect, however, an increase in production cuts. There are issues within OPEC, and if you Google it, it is very easy. You can see the UAE is against increasing production cuts. They want to increase their production instead of reducing it. And as such, they could delay, in my view, any potential increase of supply rather than increasing production cuts. So this is S1, turning that from red to green, matching our support levels, which we have placed in green. I will be readjusting R1, so 1.3260. That is for our R1 resistance level. Let's change this. Actually, we can switch this. This becomes R1. And then something new for today. We're going to be looking at the S&P 500 and the Nasdaq 100. And I think we can do a bit of Ichimoku analysis as well. Why not? It's interesting. It's nice. It's something new that we haven't really done recently. So this becomes R2, 1.3435. R3 at 1.3615. 0.3615, and this becomes R3. So we have R1, R2, and R3. That is nice. We are maintaining a slight bullish outlook, but it does need to clear that R1 resistance level for that to continue. If it falls below S1, we could then switch back to our bearish outlook for the particular pair. But the Bollinger Bands do appear to be tilted towards the upside. The RSI indicator on the daily chart, not on the 4 hour, on the daily, is at 60. So that may tend to imply a bullish market sentiment. In terms of Fed speak, San Francisco Fed President Daly yesterday implied that the Fed, if it continues on its current path, it may be over tightening. So that scenario is in play, which essentially are dovish remarks, which may have weighed on the greenback. So GBP and the euro gaining on the US dollar. Same with the yen. USD CAD, our support and resistance levels are still in play. Hasn't broken below S1. So the BOC did cut by 25 basis points. Oil is moving in a downward fashion. But I think as a result of the Jolts of openings figure, the dollar weakened across the board. So against its counterparts, I wouldn't be bearish on USD CAD because oil prices are moving lower. The BOC is cutting interest rates. I would maintain a sideways bias between S1 and R1. So we still have our support levels, which are valid. And same goes for the resistance levels. And with that, we're done with the USD against the CAD. For the Aussie, resting on that S1 level of 0.6710, not bearish, sideways bias between S1 and R1, as long as the 0.6710 support line remains valid. If it is invalidated, so if it breaks below, bearish outlook down to S2, 0.676575. Other than that, 0.6465. If it manages to break above that R1 resistance level of 0.6795, then we could maintain a bullish outlook up until 0.6870, which is the next potential target for the bulls. What is a bit surprising is my R3 level, which is at 0.7010. And let's see why. Too far away. It's a bit too far away from the price action. So we are looking for a resistance level. This was nice. Validated, pierced through, that's fine. But when it moved significantly lower, it did find selling pressure here. Is there something else that we could use? However, validated here again, went up, broke below, cleared, went up, found support, managed to break below, found resistance, broke above, acted as support. So I'm going to be keeping that level as it does appear to be significant in nature, but it's still very far away from that R2. But we are going to be readjusting it slightly. 0.6985 for that R3 line. So this is the S&P. Oil, the support and resistance levels that we had placed, still valid. Look at 67.90. It's closing in that on that S1 level. RSI is close to 30. Bearish market sentiment. On the day, it does appear to be moving slightly higher, but I think it might move up to test that resistance level at 71.40 before continuing on its descent. Now, it may be supported from news from OPEC, but from a technical analysis perspective, it does appear to be moving in a relatively downwards fashion. Onto gold, still moving in that sideways fashion. Note that 2,470 support level that we had placed together yesterday has been validated once again. Simply look at the 2 wicks from this bearish and bullish candle. Reached the bullish candle wicked even on, did it wick in exactly on 2,470? Just above, but you can see heavy buying pressure. So we're not bearish, we're not bullish, we're maintaining that sideways bias between S1 and R1, which does appear to be the next target for gold traders, moving closer to 2,530. We're expected to see some resistance at R1. If it does manage to break above R1, the next hypothetical test for gold traders could be at 2,600. Intel moving close to that $18.90 per share mark. Microsoft's broken below, bearish outlook for the company. Nvidia moving lower, has broken below 106.38, and we are on the 30-minute time frame for Nvidia. Doesn't really look that good for the company. I think that DOJ probe might be weighing more on that company stock price. ExxonMobil, sideways bias, S1 and R1. Beautiful. It's going to be moving closer towards 113.13. If it bounces off, we'll continue to validate this sideways moving channel that we have placed since roughly July 2024. So we are still maintaining our sideways bias. If it manages to break below 113.13, next potential target for the bears could be at 108.18. But because I can understand that on your screens, these support levels aren't that clear, I'll be adding this text label just simply S1 and R1. If it does manage to break below S1, I think we will be here for that analysis session and I'll be able to add those text labels. But still, it's 2 minutes, so actually, let's just do them all. 108.18. If you are looking at ExxonMobil from a more macro perspective, I would implore you to research the Persian Basin. Look at ExxonMobil's recent acquisition that occurred last year. They are solidifying the supply chain for roughly the next decade. And then if you look at Guyana, ExxonMobil looks very nice for a more macro play. despite the issues from Venezuela's Maduro, which was threatening Guyana with a potential invasion of the Essequibo region, which by pure coincidence is where ExxonMobil discovered the large oil deposits. So that is R2. So 122.95. And then, for the sake of this argument, let's find our R3's resistance line. Let's go back. We don't have any data. Okay. Roughly $3. So, guessing 125, 125.5. We are guessing that that might be a resistance level for ExxonMobil stock price. We will have to see. So this is an unverified resistance level, but as we said, I would not be surprised to see the company stock price move in a relatively sideways fashion. So the US 100, we've done the FTSE moved lower, finding resistance at 8,287. Wouldn't be precisely bearish, but if we do see a death cross, then we could maintain a bearish outlook. And the target for me would be 8,140 for the FTSE 100. And then IBM. IBM looks nice. Louis Vuitton. Louis Vuitton moving in a downwards fashion. So broke below that upwards moving trend line, which we had placed, I think either this week. Yeah, we placed maybe on Tuesday. Target for the bears for me would be 594.54. The RSI is closing on 30, which does imply a strong bearish market sentiment. So I would be bearish for Louis Vuitton stock price. Lockheed Martin remaining strong at $574 per share roughly. Airbus moving lower. Doesn't look good for the company. Volkswagen appears to have stopped the bleeding, finding resistance on that 4-hour time frame. 95.58. So that is indeed a resistance level. So the bulls tried to break above, failed to do so. Sideways bias between S1 and R1, so 92.30 and then 95.58. Rolls Royce, this is why we were not bullish yesterday. Still issues. And look, it's heading for S1, 461.80. Let's drop down. Let's see what's going on now. We are on the 1 hour time frame. And then I'll just zoom in so you can see that this is a very nice support level for the company stock price. Simply monitor this 1 hour bearish candlestick that has formed. From the 1 hour time frame, the RSI is near 30, which does imply a strong bearish market sentiment, but it does appear to be finding support near 461.80. So the bulls are in play, which once again appears to be validating the support level which we had placed together. If it does manage to break below S1, next target could be 435.95. But nonetheless, daily as well. I would maintain a sideways bias on a 4 hour time frame between S1 and R1. You can see it on your screens, 461.80. And R1 at 486.30 as well. So that is our R1 and S1 support and resistance levels. Deutsche Bank no longer bullish, has broken below that upwards moving trend line. So staying between 13.80 and 15.10. And now we are going to be looking at the US stock market. So the S&P 500 and the Nasdaq 100. For the sake of the argument, we can keep R1 and R2. This was old support, which is now turned to resistance. 5,577. So this would be my R1. For our two, 5,720, 5,850. And as we said, we will be adding Ichimoku to the indicators that we have on this particular chart. It's going to be a very brief analysis of Ichimoku as it is quite advanced, but nonetheless, it might be interesting to see. 1,490. Now we are looking at the S&P 500 on the daily chart. It has broken below our old support, turned to resistance level. RSI is close to 50. I wouldn't be precisely bearish for the index. I would maintain a sideways bias due to the fact that it is finding support near 5,490. Now, the jolts came in lower than expected, which does tend to increase the possibilities expected by market participants of a greater rate cut by the Fed. Such, if they start cutting aggressively, the stock markets may find some support. So, potentially stopping the bleeding of the S&P 500. So these are our support and resistance levels. And as usual, if it breaks below S1, next target could be S2, breaks below S2, next target could be S3, breaks above R1, next target could be R2, and then hypothetical resistance level at 5,850. And now let's add an indicator. Ichimoku colors. Okay, doesn't look nice. So let's make this thicker so that it's easier to see. Baseline. And then something. It doesn't look very nice. So I'll remove the Bollinger Bands. I'll remove the moving averages. And we'll simply look at Ichimoku today. So Sandy Brown, let's turn this to green. Uh, the conversion line should be blue, and then we'll change the baseline to be red. Then we have the lagging indicator in black. Now, essentially, the area between lagging span 1 and lagging span 2 is considered to be the cloud. The way these are computed, we can go more in depth at a later point in time. But overall, what is crucial is the distance between them and how wide this is. So the cloud shows the relevant strength of the market. So if it is green, it does imply that the relative strength is greater and is a very strong upwards moving trend. The lagging indicator is plotted 26, the price of the market closed 26 periods back. And in theory, if this is below the price action currently here, then it is a bearish signal. If the price action is above, then it is bullish. Now, the baseline may act as support when the market is in a general uptrend, or the conversion line could act as support if it is in a very strong uptrend. So you can see here, the conversion line acted as support rather than the baseline. Now, within the cloud, depending on the width, so its strength, it could be considered as a key support level. So it may find significant support the wider it is. If, though it is very small, for example, here, and let's see if we can figure it out and see. And this is actually a bit nicer because it's a bit busy later on. So you can see the cloud is green. The area between lagging span 1 and lagging span 2 remains relatively the same. So essentially, bullish outlook for the S&P 500. Look at how the conversion line, because it is a strong uptrend, instead of the baseline, it is the conversion line that is acting as a support level. When it broke below, the baseline acted. When there is a crossover between the baseline and the conversion line, it may act as a signal for a bearish outlook. If the conversion line crosses above the baseline, then it may provide a bullish signal. So crossing below and crossing above. These are not considered moving averages, but instead considered as midpoints. The lagging indicator, as we said, if it crosses below the price action, is considered to be a bearish signal as well. And if you combine all of these together, then it may provide some indication. The area between lagging span 1 and lagging span 2 can also show you the strength of the particular instrument in the way it is moving. And look how we said that it is acting potentially as a support level. The baseline was up here, but the cloud, due to its width, acted as a support level. So that is also into play. You could you could look at higher lows and higher highs with the lagging indicator as well. But essentially, what it is showing us currently is that there is a bullish relatively market sentiment. The area between lagging span 1 and lagging span 2 is quite high. The baseline here may act as a support level should it move lower. And the conversion line remains above the baseline. So this is a conversion line and this is the baseline. So there has not been a crossover yet, which does tend to imply a relatively bullish market sentiment. But when they do crossover, then that might be bearish. That is also why we are not bearish on the particular index and instead would maintain a relatively sideways bias. And it hasn't crossed below the cloud. It is finding support within the cloud, as we said. Distance finding support despite the conversion line being up here and the baseline being here. If you look back in time, once it crossed above, there was a crossover here, crossed above, and moved sharply higher. This is also Ichimoku theory, and I would personally use this from a more macro perspective rather than using it on a 4 hour or a 15-minute time frame. So overall, it does imply that there is a relatively bullish market sentiment for the S&P 500, could be retracing lower before it continues on its ascent. But that is purely for the S&P 500. The same could be said though for the Dow Jones 30, relatively sideways bias between S1 and R1. Wouldn't be bearish just yet. Needs to clear that 40,680 support line for me to be bearish. I'm still maintaining that sideways bias as long as that S1 support level remains valid. For the Nasdaq, this is not looking nice. Higher high, lower high. If it clears 17,200, then and forms a new lower low, that it would be very bad for the particular index. If that S1 figure of 18,630 holds, however, that might be good for the bulls, but it's not looking that good for the index. I would be very concerned for the Nasdaq and would have to monitor it quite closely. But this is the weekly chart. On a daily time frame, does appear to be moving towards that S1 level that we had mentioned. We can maintain that. Overall, I think the US employment data on Friday is a make or break for the markets. And based on what comes out, then it may have significant implications on the US stock markets. And I'll simply add the text levels for Deutsche Bank because I've forgotten to do so. So S1 at 13.80, S2 13.05, S3 at 12.20, R1 at 15.10, and then R2 15.85. And then R3 16.70. And that's it for Deutsche Bank and in general for today. We will see you all probably next week. Thank you very much. Have a wonderful day, and I'll see you all next time.
Okay, hi everyone, welcome to today's webinar. So before we get started, I'm gonna give about 2 more minutes to let more people join our session before we get started. In the meantime, let me know if you can hear me and see me in the chat. And yeah, I'll see you guys in about 2 more minutes. You can see more people coming in. So yeah, we'll start in about 2 more minutes. Thanks everyone. Okay, I forgot to start my recording earlier. Okay, no worries. So it shows strong recent bearish divergence versus the RSI. So that's the main point. But lastly, you can see that we have a combination of the RSI breakout of the ascending trend line. Secondly, we have a bearish divergence. And lastly, we have price itself breaking out of the ascending trend line. So that all gives us a really high probability that price is going to continue to break out of the ascending trend line and move in a downtrend. And you can see that's exactly what happened. Price broke and dropped strongly. Okay. Okay. We have another example here. So you can see we really have a lot of examples to go through today. But basically, in this example, both prices are moving in a descending trend line. RSI is breaking out of the trend line. Okay, and then subsequently, we can see that there is a bullish divergence. Price is making a lower low, RSI is making a higher low. Okay, so that's a bullish divergence. And currently price is testing the descending resistance line, and we're wondering if it's going to break out of it. So with all 3 points, firstly, it's testing the line. Secondly, we have this RSI breakout of the descending trend line. And lastly, we have a bullish divergence as well. Okay, and that all shows a successful breakout of descending resistance line as forecasted by our RSI. Okay, any questions so far? Okay, all good. Now let's look at some GIFs that um show us how a bullish divergence works. So if we take a look at the image first, price is moving in a descending trend line. And we can see, so the first thing is we see price moving in a descending trend line. Second thing is we have a bullish divergence on our stochastic. So price is making a lower low and our stochastic is making a higher low. So that's the second thing. And lastly, we have our resistance level that the swing high, which is in line with our 100% Fibonacci projection. Okay, and then if you look at our GIF, you can see what happened after that was that price subsequently broke out of the descending trend channel, and moved upwards, testing that resistance level very strongly and reacted off of it multiple times. If you're wondering what resistance level I'm talking about the 1.56099 level. Okay, now let's look at another example. Here is more straightforward. We just have price moving in a bullish divergence with price making a lower low and stochastic making a higher low. And subsequently, after that, we also see price moving upwards. And in fact, it actually moved above our Ichimoku cloud as well, which suggests a bullish signal. Okay, do you guys have any other questions? If not, let me just pull up my charts and we can look at a couple of charts together and see if we have any support or hidden support resistance levels or any divergences. Okay, if you guys have any charts you'd like me to go through, let me know in the chat as well. Okay, let's look at um by looking at AUD maybe. Okay. Okay, so on our weekly time frame, prices are moving in this descending trend line. Okay, so again, what makes a valid trend line is if there are at least 3 touches, which you can see here, we do have that. And then let's go in with on a daily time frame to go in with our support and resistance levels. So I'm gonna see if I can identify any trends first, but here we see prices kind of ranging. Okay, so firstly, I'm gonna place my pivot over here. Okay, I'm gonna label this as an intermediate resistance. Okay, and then my first resistance, I'm just gonna place it up here. Okay, and then for my first support, I'm gonna place it at this double swing low. Mm, okay, and I try and pull it back as far as I can without cutting too many bodies of candlesticks. Um, yeah. So for example, over here, I would not place it here because of this area here that cuts a lot of candlesticks. So if you're just cutting the wick like we are doing here, that's perfectly fine. Okay, now let's go in with our Fibonacci levels. So I'm gonna go in with a retracement and I see my 61.8 line up with my first support. Next I'm going in with a projection. Don't think. Okay, 61.8 lines up nicely. And over here, I think we have another extension. Yeah. So for extensions, we use 127 and 161.8, and we are using a Nike tick kind of shape. So if you can identify this kind of pattern, then you can use this 127 and 161.8. Okay. Uh, Again, these Fibonacci levels don't have to line up exactly at the level. As long as it's kind of near that level, that's good enough. Okay, so let me just highlight this level here because we have a confluence area, which is basically when two or more Fibonacci levels line up in the same area. Then you can see my 61.8 also lines up with that area. And my 50% actually as well. So I'm just going to keep those two. Okay. So here we're definitely going to expect to see some resistance in this area here. Now let's pull out our indicators. I like to start off with Ichimoku and MACD because at one glance you can see exactly what these signals are. So for Ichimoku, price is currently moving in the cloud, so we can't really say much except that the trend is probably changing. So we see price was moving below the cloud before, which is a bearish signal. Now that it's moving within the cloud, we might see prices um, move in an upward momentum instead, but we can only confirm that once price has moved above the cloud. So I'm going to remove that for now. And our MACD is also giving us a bullish signal. Okay, so that supports our analysis. Let's look at stochastic first. Okay, if we go back to my slides, we typically look at 533 as our settings. So let's use that. Okay. Um, okay, let's see if we have any divergences. Over here, I can see that we do have a hidden support. So this is the tool that I was talking about earlier. Basically, okay, I'm gonna hide my MACD first. Okay, so basically when price is making a higher high like we see here, okay, just a second. I might change this back to 21. Okay, reason being my time frame is daily time frame. Um, here. So between these 2 points, right, price has made a lower low, slightly lower low, or rather, price is making the price is moving in this first support, okay? Whereas over here on our stochastic, we can see a very sharp difference. Price is definitely making a lower low. Okay, so this could suggest that price is going to continue to drop down here. Okay. So even though the default settings are normally 533, you can adjust it according to the time frame that you're using and according to like what works best for your chart and your trading strategy. Nothing is ever, set in stone. It's really dependent on what charts you're using. So yeah, feel free to adjust it accordingly. Okay. I guess another example we can see if we can find more divergences just from this chart alone. Um, okay, price is making a lower low here, and here it's making a slightly higher low. You can see immediately after this, if we replay it, okay, you can see price proceeded to move in an uptrend after that. Okay, that's a pretty small example, but yeah. Okay. Any requests for any charts that you guys would like to see, or any examples you want me to go through? Mm, oh, we can take a look at stochastic as well. Okay, so we're looking at stochastic now. Let's look at RSI. Mm, can I add more examples on the chart? You mean do more of these divergence examples? Identify more divergences? For example, over here we have a hidden support, okay, whereas on our price, it's making a lower low. Okay, and the tool that we're using is this, just the horizontal line. So it makes it really easy for you to identify whether it's a support or if it's a divergence. Okay, a very simple one to identify is over here. Okay, so you can see price making a lower low and our RSI making a higher low. Okay, you can see after that price proceeded to after this divergence, price proceeded to shoot upwards. Okay, yeah, so yeah, that's on the RSI. Um, okay, another one here. Price making a lower low. Okay, and then RSI making a higher low. Okay, so then you see price also shot up after that. Okay, shall we look at another chart? Okay, let's just focus on looking for divergences, I guess. RSI, stochastic. Let's focus on RSI first. So on our RSI, you can see price moving in this support level. Okay, but then you can highlight the points that you're looking at as well to make things easier. And price is making a higher low, whereas here we have a hidden support. Okay, after that you see price shoot up as well. Mm. Another example over here. Price making a higher low, sorry. And here price is making a lower low. Okay, so this is a bearish divergence. Okay, hidden resistance. Now maybe we take a look at that. Over here, you have a hidden resistance level from between this point to this point here, right? We can definitely see that price was making higher highs. Okay, so we also see subsequently price proceeded to drop, reverse off of this resistance level. Okay. Okay, any other questions? Anything you guys want me to go through? Any charts you want me to take a look at? Um, okay, if not, then that's all I have for you guys today. Thank you guys so much for joining me. I'll stick around if you guys have any other questions. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this helpful, and I'll see you guys again next week. Thanks, everyone. Bye. Have a great rest of your week. Thanks, everyone. Yep, take a look at euro dollar. Sure. Do you want to just take a look at the divergences, or you want me to do a analysis? Yep, we can do both. Okay, so on our daily time frame, we have this as our first resistance, and then my pivot, right? And then lastly, my first support just here. Okay. Um, yeah, so then I'm going in with a projection. Okay, my 61.8 lines up nicely. Going with retracement, my 50% lines up. Mm, I think my retracement here also lines up. Okay. Um, so here we have, oh, not really. Okay, I think that's all the levels we have. So then we pull out our indicators. Ichimoku MACD. Okay, price is moving within the cloud, so we can't use that. MACD is moving, ascending in a bullish signal, sorry. So if we look at stochastic, um, here price is kind of moving upwards, right? Making a higher low. Mm, okay. Here it's kind of it's not really a support level, kind of making a lower low here. Okay, you can see from the dotted line that it's not horizontal, right? So it is slightly um moving in a downtrend, or rather making a lower low. Okay, so it is a bit bearish, so we might continue to see it move down. Okay, similarly for our resistance, here we have a hidden resistance level. Okay, and then we see price moving in, making a lower high. So That might actually be better than this. Yep. So this is a bearish divergence as well. Okay. Yep, no worries. Okay. Yep, if there's nothing else, uh that's all for today. Thanks everyone. Bye.